Hey traders, this is Blake Morrow with Trader Summit. And for the very first time, I'm going to bring in the Chief Market Strategist at Blue Line Futures, Phil Streible. Good to meet you, Phil, and good to see you.
Yeah, thanks for having me.
No, thanks for being here on the Trader Summit. I want you to talk about this a little bit later as we get into this interview. I want you to talk about what you do. But I was watching your morning show this morning, and you covered a lot of different markets. Tell us a little bit about the show. Well, just kind of what you're covering right now, and what's really got your attention at this moment.
Well, generally, what I do is, we work with a large retail base of clientele. They all trade in the futures commodities markets. It seems like half of Blue Line Futures is mostly like agricultural hedgers and things like that. And then the other portion of our business is mostly the macro markets. So what I generally do is every morning we know that these are global markets. A lot of different developments happen overnight, a lot of geopolitics, and with where not only the Fed where they stand at, but also, central banks globally. It makes sense to come out and put out a morning video that covers, what we've seen happen overnight in the markets, what we're anticipating, and then also try and set the stage for our clientele so they don't, run into any kind of roadblocks. Like something just briefly, we, stated that if you are, looking at buying gold or buying some asset classes, you probably need a much stronger non-farm payroll number. If you were looking at, the tailwinds behind it, you want the weaker number. So we kind of just lay out these kind of road plan for our clientele, and we put out a video every day.
That's great. And I like those. I know Bill's been doing those for years as well. And so I love what you guys do over there at Blue Line. Let's talk a little bit about current markets, and let's talk about your views on, well, a couple of things. I would say the Fed last week. What was your takeaway there? And then did anything change if you saw the 60-minute interview with Fed Chair Powell last night?
Man, I got to tell you, I knew that he wasn't going to break for the markets. They wanted him to, pivot dovish, really give that indication of the March Fed cut. No one specifically asked him about the March Fed cut. They kind of like alluded to it. And you could see that when he was doing his post conference, he was getting annoyed that no one would just be like, are you going to cut rates or not in March? Because it just doesn't make sense. Too much of the economic data has been really good. Everything from the GDP, the jobs data, the ISM data, the retail sales, the consumers doing well. I mean, if you're anybody that like I live in Florida in a very touristy area, and I could just see week after week, month after month, day after day that the restaurants are really busy, that the retail shops are full, they've come down quite a bit, but they're quite elevated and they're going to stay here. There's pockets where inflation has come down, but I just don't think it's enough to justify Jerome Powell just doing an about face and coming down. It hasn't impacted, it's starting to impact like credit and lending and commercial real estate, things like that. But we're just not seeing it where it's come down to that level where they're comfortable enough to cut rates. So I kind of knew that he was going to throw some cold water on, all the people asking questions. And that's why now the March probability is only a 14.5% chance, where you go out to something like May, it's significantly higher because it has two different inflation reports. It also have a revision on CPI, the annual CPI. So it could really give some more guidance as to where we're at. So if you look at the May meeting, it's about 63% chance that they cut rates.
So, and I know that has a huge effect on, what you do at Blue Line Futures and how you guide your clients. And earlier today, I was listening to your morning video, and you were talking about gold. How do you feel? How do you feel about gold at current levels? It's been very sluggish, and if you look at silver has been really performing poorly. Are you constructive for the bulls, or do you think there's some downside there?
It's the Fed's short-term rates and adjustments, which are going to cause these short-term gyrations in the gold market, and then it will tend to overreact on hotter or cooler data because everyone's going to kind of scramble because they want to front run the Fed. if you look at the gold market, it's been quite constructive. If you look on a much larger stance, how the gold market is, central banks have been buying. If you look at um, China, Poland, India, they've all been major buyers of gold. They're trying to basically cut down their FX reserves and just kind of declutter and deglobalize their currency holdings. So they've been selling off US dollars, things like that. They've been buying gold as their staple reserve. I also think that, from the standpoint that we know that the Fed will ultimately cut rates at some point, gold is a great asset class to own. If you go back historically from 1990, that gold within the first 30 days of that first interest rate cut has rallied on average about 6%. So it makes sense to have it as this asset class. So, and with the geopolitics political situation, I think they're being dummied down a bit here, and it's just one or two things that could really widen this conflict here. Gold could be that safe haven and choice, like what we saw with the onslaught of the Ukraine-Russia conflict. So I think gold from a long-term standpoint, is very valid as an asset class to own. From a short-term standpoint, you're probably going to get chopped up. It's probably going to be very emotional. And if your top stops are too tight or your position size is off, it's going to eat up some of your capital.
And we're probably just like one headline away from all-time highs anyway. It's in something like gold.
It is quite possible. I mean, we've seen 11 straight days of ETF outflows on the silver market. We've seen, multi-month just outflows on the ETFs in there. There's just not, it's not a lot of ETF demand. People are chasing other things. There's just too many other asset classes and even individual stocks, things like, it's like one thing after another. Meta, Facebook, whatever. You got Amazon, Apple. I mean, it doesn't matter. People are chasing those magnificent seven right now. So it's tough for you to go, okay, I'm going to park some money in a zero yielding asset like the gold market right now when I can at least get 5% in a money market. So it just doesn't have the dynamics what it takes right now to get it going. However, yes, you're very right as far as one mess up with a missile with Iran, and hey, it's going to be, gold's going to break through 2162 in a second.
Yeah, that's a great point. I see, and talking to you, you focus a lot on the macro, which is great, especially for your clients there at Blue Line. Let me ask you your opinion, since you deal in the copper markets as well. What's your view on all the steps that China's taken in recent months to try to stabilize their markets? However, as obviously China's slowdown. It's a little scary, and you look at their markets, and they look a little unnerving if you happen to be long. Do you have any opinions on China?
So if you rewind back like a week and a half ago, copper was probably like one of the best looking charts out there. The stochastics were rise from oversold territory. Basically, if you're not looking at a chart, it looked like a Nike swoosh. Look at your shoes. That's what the chart looked like, and it was going to blast off again. We have one of the tightest inventories since 2021. Mining supply has struggled. Obviously, if you cut rates, that's going to be a tailwind because it'll boost, the demand for building and things like that. The Chinese stimulus, it had to come. And when it came, we saw copper prices basically explode that day. I think they were up like almost like 10, 12%. But then you get this pullback here, what we have right now, where their equity markets are just in a dramatic decline. They have deflationary problems right now. Investors are short. It's just not an asset class that has a sustainable tailwind behind it at the moment. You really need to see the EV demand pick up. You need to see the US get really dovish, and then you need to see China be able to stop the deflationary measures in their country, support their stock market, and have confidence behind it.
Yeah. Okay. Well, that makes sense. And it sounds like in your view, we're not quite there yet, but, one last thing, and then I'll let you go. Based on what you're seeing right now, where are some of the best opportunities for traders at this moment? If you're like, look, I'm really focused here. Maybe it's Mag 7, maybe it's, buying the dollar, whatever it is. Maybe you're selling the bond market and getting long, some 10-year yield or something. What are you seeing as the most attractive?
I mean, I give you like two markets, like the S&P 500. I think that we're firmly in a bull market. I think we'll have some gyrations back and forth until about March. We should see some corrections here, although the corrections are very short-lived. There's too much cash on the sidelines that needs to come in. If you look at the fact that it's an election year, from 1928 to 2020, the average return's been about 7.5%. The median return, the middle return is going to be about 10.7%. The labor market's been cooling without deteriorating. Obviously, we had a great number on Friday. We also have inflation is starting to come down. I think we get the soft landing, and I think we'll get the monetary policy. They'll start to normalize on it, and that'll end up helping out the stock market. So we chop around until March, and I think we take off there, and that's where you get the good returns, as the administration will try and do whatever they can. The other market, which is the cryptocurrency market, we had a $10,000 sell-off in Bitcoin after the ETF was launched. I thought that was monumental, that the SEC had done something like that, but I think it's growing in demand and popularity. I think it's limited supply, and you're going to see people rotate out of the coins, and they're going to go into the ETF. We've recovered from our lows because FTX had to, because they're in liquidation mode, they had to hedge. They shorted futures. That's why you get the $10,000 sell-off. Now that that's done, we're starting to come up, but none of these financial advisors, nobody who's works at a big firm right now has figured out how to model the Bitcoin ETF into their asset allocation strategy. And as that comes on, that's where that demand really widens out and strengthens. And I think you get, new all-time highs in Bitcoin. You get 80,000 at the end of the year. You get 100,000 and beyond after that, because of the fact that it's widespread popularity.
Well, that's, I think, a great overview of the S&P and crypto as well. Phil, I really have enjoyed our conversation. I hope to have you back here at the Trader Summit. I'll probably circle back with you over the next month to 2 months and see where we're at from there. But what's the best way for traders to follow your work in particular? Because I love your morning video. I watched it today and I was like, wow, this is great. But where can they find all that?
If you go to bluelinefutures.com, you can register for a 2-week trial on our research. But we have a page on, we're on everything from Facebook, Twitter, YouTube. I'd say one of our largest for video followings on YouTube. So if you just go to YouTube and search for Blue Line Futures, and if you don't like the macro markets, say you lean a little bit more as far as on the agricultural markets, livestock, my partner Oliver Slope, he's been on your guys' program. He puts out a great video every single day covering those markets. I have another partner, Chris Chavez. He does a midday market minute covering, what kind of happened as the day unfolds. And then my other partner, Bill Baruch, he focuses mainly on the capital side, where he's looking at individual stocks. So if you see a big move in, Adobe, Amazon, Microsoft, any of those, he's probably going to post a video on it. And it's a lot of good content. We're just trying to keep people as informed as possible as we can on what's going on in these markets.
Well, Phil, I appreciate your time here on Trader Summit, and I hope to have you back here soon.
Yeah, thanks for having me on.
All right, guys and gals, if you enjoyed what you heard here from Phil, make sure you give him a big thumbs up. Jump down in the comments below if maybe you have a different view than him, and make sure you subscribe to the channel so you don't miss any of this great content exclusive here at Trader Summit. So thank you so much. Phil, we'll catch you soon.
Thanks a lot.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.